Hi, this is Lara at Elliott Wave Stock Market with your end of the week analysis for the trading week ending Friday the 13th of January 2017 for the S&P 500. Happy Friday the 13th everybody. I'm expecting now some downward movement next week, and if this correction lasts a Fibonacci 34 sessions it may end on the 2nd of February. After that the bull market should resume. This bull market is strong and healthy. Use corrections as an opportunity to join the trend. Elliott Wave analysis first, classic analysis last, and I'm making more notations in my charts. I won't go over these, they're obvious, to try and make the analysis a little bit clearer and more obvious. My wave count sees a cycle degree fifth wave within a super cycle fifth wave, so an upcoming grand super cycle trend change. That's a once in many generations trend change coming up, but we're not there yet. The structure of cycle 5 needs to complete. You can see the structure better on the weekly chart. Within primary wave 3 I have intermediate 1, 2, 3, and now intermediate 4 needs to unfold. Its counterpart is intermediate wave 2, which lasted 58 days. At this stage I'm expecting intermediate 4 may complete in a Fibonacci 34 days if it ends on the 2nd of February. If that's not correct, then it may be longer lasting than that. That would be more brief than the double zigzag of intermediate 2. And so when the structure of this expanded flat correction that's unfolding now is complete, then I'll look at the possibility of a combination or a double flat to continue sideways for intermediate 4 to last even longer, so that the proportion is better with intermediate wave 2. Intermediate 4 subdivides as a flat. The A wave is a 3, 3, 3, 5. The B wave is a double zigzag. We need a 5 down for the C wave. This purple trend line is the most important piece of analysis on all charts. Draw it carefully as shown on the weekly chart from the previous all-time high at 2134 to this all-time high right here, and extend it on out. My daily and weekly charts are always on a semi-log scale. I'm looking now for price to come down and find support at this trend line. It broke through here, finding resistance beforehand and then breaking through. It's really typical to see price curve around and come and test those lines for support before moving up and away. That would be very, very typical, and if that's how price behaves, it's going to offer us a gift. It's going to offer us a beautiful opportunity to join an existing, strong, young, early trend. The final target for a grand super cycle trend change is 2,500 exactly. That's where cycle 5 would reach equality in length with cycle 1. That's the most common ratio for a fifth wave. It's a very good round number pivot. When we get there, I will expect some strong resistance. Intermediate 4 may not move into intermediate 1 price territory below 2193.81. Finding support at this purple trend line is going to make sure that it doesn't get down to the invalidation point. Let's have a look at the hourly chart, where the end of intermediate wave 3 is off to the left of the chart. Within 4 we've got the 3-wave structure for A down, complete here. The double zigzag up for B, complete here. We now would expect a 5-wave structure down for C. I had drawn a tentative green resistance line across from this high across these two highs, and I had expected that to provide strong resistance now because it had been tested and it wasn't too shallow. Sorry, it wasn't too steep. That's not what happened on Friday. Price gapped up above the line and remained above it, so I've removed that line. It's no longer useful. Within minor C, instead of a series of overlapping first and second waves, I expect now we've only got one first and second wave. So minute wave 1, a short little impulse complete here. Minute wave 2 may be unfolding as an expanded flat, or possibly a running flat, but I don't like to label running flats in my wave counts because they're quite rare. So I'll expect it's an expanded flat subdividing 3, 3, 5, which means minuet C needs to move slightly beyond the end of A to avoid a truncation, but not beyond the start of minute 1 above 2282.1. So this wave count expects a very slight new high on Monday above this point, but not below this point. So that's a really tiny little range it has to move into before it turns. Now, if I'm wrong, minute wave 2 could also be labelled a combination. We could have a flat for W, a zigzag for X, and a zigzag for Y possibly could be complete over here. So if we don't see that slight new high, that's how I'm going to label it. Either way, I'm expecting overall downward movement for Tuesday. Monday's a holiday and it's closed, so when markets open on Tuesday, I'll be expecting downward movement as a low degree or minute degree third wave unfolds downward. So I will be expecting to see an increase in downward momentum. The target remains the same. Let's have a look at some classic analysis at the weekly chart level, and let's make that quite a lot bigger and see if there's any support for that Elliott wave count. We have this week closing with a long-legged doji. This looks like a dragonfly doji. It's come with some increase in volume, and the balance of volume for the week is down. So this dragonfly doji looks really typically corrective. It's pretty common to see doji candlesticks within consolidation. So it looks like prices overall in a small consolidation. With the balance of volume down and an increase in volume, there is support during this week for downward movement from volume. So that gives slight support to the Elliott wave count, which expects a bit more downward movement. This consolidation certainly could just continue sideways, or it certainly could continue down to find support at this purple trend line. Now this is drawn in exactly the same way on my daily and hourly charts. I've drawn it from this all-time here, back on this date in 2015, to this all-time here on 2016, and it extended it on out. After price found resistance and moved down, it's broken through with some resistance before it did so. It would be so typical to see price curve around and find support there. That's what the Elliott wave count expects. That's very common price behavior, so that's supported. There's support line for on-balance volume here, and this long-held one, this is steeper, but it's so long-held and it's been tested 4 times now, so it has good technical significance. This may assist to halt the fall in price, along with this very strong support line on the price chart. RSI is not extreme, there's still room for this trend to continue, and ADX tells us that there's an upward trend in place and it's in the early stages. This is still a good time to join the trend, so corrections offer an opportunity to join the existing upward trend. The black ADX line is now just above 15, so a trend in the very early stages is indicated, and the black ADX line is below both directional lines, so the trend is still very young. Let's have a look at the daily chart. I've drawn some trend lines today across what looks like a possible flag pattern unfolding sideways with a slightly downward slope. Flag patterns are reliable continuation patterns. In this case it would be a bullish continuation pattern because the trend is up. It's sloping slightly against the trend, so that's slightly stronger, but we've got this little overshoot of the lower edge, so it's not perfect, but it does look reasonable. We've got overall sideways movement. Friday's upward day, overall for that session, the balance of volume was up and it was lighter, so there wasn't support for the rise in price during Friday's session, and the longer upper wick with almost no lower wick is slightly bearish. Along with resistance at this trend line here, or pretty close to it, I'd be expecting that's probably it, and we're probably not going to move much, if any, higher when markets open on Tuesday. I'd be expecting prices overall going to move sideways and or lower to complete the flag pattern. In my text analysis, I've got a target for this possible bear flag using the measured rule and the pole from this low to this high. If we break out about here, use that target. If my hourly Elliott wave count is invalidated and we see a new all-time high from the S&P, and if that happens on a day with an increase in volume, then my hourly Elliott wave count is wrong. Price may be breaking upward out of a flag pattern. Use that target I've given using the measured rule for the next movement upward. That would offer a good opportunity to make some profits within an existing upward trend. One word of caution though, as I always have to do given any trading advice, it's absolutely essential that you manage risk carefully. Use my 2 golden rules. The first one, always use a stop on every single trade, and if it's a mental stop, watch the market closely and be very disciplined in applying your stop. The second rule, never invest more than 1 to 5% of equity on any one trade, and if you're a beginner trader, reduce that to 1 to 2 or 3% of equity for any one trade. If you follow those 2 rules, you'll be managing risk well and overcoming emotion, which is the biggest obstacle to traders. At the daily chart level, ADX tells us the market's consolidating. The black ADX line is moving down. That's exactly what price is doing. It's consolidating, so no surprises there. ATR is flat. Again, that supports the idea of a consolidation. On balance, volume may be useful here. This purple trend line, I'm reasonably confident it's reasonably accurately drawn. There's a little bit of leeway there, but really not much. On balance, volume has come up to find resistance here. This line is long held, very shallowly sloped, and repeatedly tested, so it has strong technical significance. This, along with this trend line up here on price, may assist to halt the rise in price we saw on Friday and force some downward movement on Tuesday. If we can see a break below the yellow support line, that would be a bearish signal, a reasonable bearish signal. The line's been tested a few times, but there's a fair bit of leeway in exactly how this is drawn, so I've tried to pull it down a little bit lower. So if we see a break below it, that should be a reasonable bearish signal. A break above the purple line would be a very strong bullish signal. If that happens, expect price is going to make new highs. RSI is not extreme, and so there's still room for price to rise, but at the last high it did exhibit divergence with price, telling us that this little piece of upward movement here to the last all-time high for this market exhibited some weakness. Now that actually fits the Elliott wave count beautifully. That's exactly what you should expect at the end of a B wave. B waves are suckers, and they should exhibit weakness and internal weakness and divergence. So that fits the Elliott wave count nicely. We also had multiple divergence between price and stochastics at the last all-time high, also supporting the Elliott wave count. MACD is bearish. That slightly supports the Elliott wave count, but this is quite a lagging indicator, so I'm not going to give that much weight. Bollinger Bands are really tightly contracted. We can expect to see them widen again when volatility returns to this market. That might be with some downward movement to that support line on my weekly technical analysis chart. Let's have a look at VIX and the AD line to see if there are any clues as to what's going to happen on Tuesday. I've noted that short-term divergence between price and VIX is not always working. There's nothing in technical analysis that is going to always work. If there was, we'd all be multimillionaires. But this is working more often than it isn't working. What we've got here from this high to this high with inverted VIX and this point to this point on price is some hidden bearish divergence. Price has made a lower high, but inverted VIX has made a higher high. That tells us that for this upward movement for Friday and the upward movement toward the end of Thursday, this upward movement has internal weakness. We've also got the same hidden bearish divergence between the same 2 points for price and the AD line. The AD line has made a new all-time high, but price has failed to make a corresponding new all-time high. That tells us that for this upward movement in price there is some weakness. So that divergence between inverted VIX and price and the AD line and price points to 1 or 2 days of downward movement. Like I said, this short-term divergence is working more often than it isn't, but it doesn't always work. On balance of probability, I'm expecting some downward movement early next week when markets reopen. That's all from me with your end-of-week S&P analysis, and if you would like daily analysis of this market, you will find it in the membership area of the Elliott Wave Stock Market website.